welcome to the podcast, everybody. Thank you for joining me. Appreciate it. Welcome aboard. If this is your first time watching one of our video podcasts, welcome. Thank you for joining us. Appreciate it. Basically, what we do is we just kind of take you through technically, really just some major things going on with the market, show you some charts, some of the highlights, maybe show a few stocks, just some things that are sticking out to us. And if you want to email me, you can always do that. We can maybe answer your questions right here on a video podcast. It's just Carl, K-A-R-L, at eggerscapital.com. The website's just eggerscapital.com. And, of course, we'd like for you to join us on our weekly radio show that airs live in San Antonio, but then you can obviously get it on the website. You can stream it. So there's lots of ways to get some of the information. So, couple of things. Did my first Periscope today here on June 24th, 2015. It feels kind of like using Twitter for the first time. Nobody really knows what to do with it, but basically, if you don't know what Periscope is, it takes Twitter. You can click on it. It's a separate standalone app. It does a live stream, and I don't really know what we'll do with it yet. We could do some type of morning briefing or something, kind of what we're looking at for the day, maybe an afternoon deal, but it's basically use a phone, and boom, instantly, there it is. You can watch it after the fact. And it's a quick, easy technology. So a lot of people are starting to use it, and we'll try to use it to try to get you some more information. And it's quicker because it doesn't take all the processing that a video podcast does. All right, well, we got this down day today, and we've got about 10 minutes before the market closes. As I'm talking, we're down about 160 points. Of course, a lot of the volume and a lot of the movement comes in the last 10 minutes, so that could change as we move along here. We'll update you at the close here, but down about 160, almost 1% on the Dow Jones. The S&P 500, which you're looking at, down about 64 basis points, 0.64%. Russell 2000 getting hit a little harder, down almost 1%. International's down pretty much across the board. Everything's down. Even oil's down. Gold is down marginally on the day, so really just bonds are up today. That's about it, kind of a safety trade. And I think there's a couple things going on. Number one, we still have Greece, which, resolution, no resolution, extension, no extension, money, no money, I mean, it goes back and forth. And I'll be frank, I don't know all the details of it because it's just such a mess and things change so fast day to day. But yes, it would have an impact on the market. I do think something ultimately gets done, though. I think that's why the market's holding up okay. Compared to 2010 when this first happened, it was, we had about a 16% sell-off in 2010, and we're not seeing that right now. So that's part of the reason. So that could get resolved pretty quickly. May not be what everybody wants, but it's better than the alternative, I guess. The other thing is Carl Icahn tweeted out that he sold his Netflix. Take a look at Netflix here, and you'll probably see why he sold it. And I'm only going back to 2013, but he had bought it, or I think at $58 a share. It's at $6.78 a share. I think it's an 1,100% return. So he decided to go ahead and take profits. Netflix is ridiculously expensive. We know that. I think it's a smart thing for them to take profits. They announced a split. Sometimes when companies do split, they at least move sideways for a while. And so, he's taking profits, so he's out of Netflix. His next pick is Apple. He thinks that, and he's been in Apple for a while, but he says Apple's got a lot longer way to go, like Netflix. At least Apple, from a valuation standpoint, makes a little more sense. You're talking a 15 PE. It's got a dividend. They're going to buy back shares at blah, blah, blah. And so, and the thing I like about Apple, and again, for full disclosure, we own Apple in our Dividend Plus portfolio. It's a portfolio whose goal and objective is to have a 4% dividend yield while having a 10% growth in those dividends in the income stream per year. That's the goal of that portfolio. So we have Apple in there. Apple's not a traditional dividend stock, but we have it in our portfolio, and we think that's a good place for it. But you can see after a sideways movement, then we get it up, goes sideways, up again. Now we hear our sideways. So, at some point here, whether it's as the 200 comes together, and we think it'll have another leg up. Obviously, it does have to do with what's going on in the market. If the market completely falls apart, Apple will probably go down with it. So that could definitely happen. And in terms of the overall market, you're looking at really. Let me go back to the go back to the S&P here. Let's see. We're at the S&P here. We're still on this channel. I've had these lines drawn, it seems like forever. We are moving sideways. This is one of the, in fact, saw a stat the other day that we haven't had a 1% weekly move in, I think, 8 weeks, more than 1% one way or the other. It's one of the least volatile times in history. And what I've seen most of the time is these things will tend to resolve themselves to the upside. So we'll see this time. We have seen some things lately. I post on the website in regards to how bullish or bearish people are. And right now, bullish people are very low. And so that has been a time, if you want to go look at that chart, we have it on our website, eggerscapital.com. That's been a time we've gotten a move up. And after we posted that, we did get this little move up here of about 3% in the S&P. But for the most part, there's still this overhang. What's the main overhang? Interest rates, right? When will the Fed raise rates? And secondly, Greece. And then is the market just frothy in general? And the answer is yes, it is, but we're still seeing some reasons to believe that we think this market goes higher, not lower. And of course, I do think the economy is fragile. It's a fragile economy that, a couple of nasty things could all of a sudden take this thing down pretty quickly. We're subject to a quick sell-off, a la what we saw in October of last year, December, January. We haven't seen anything like that lately, so we could get that. But of course, everybody's expecting that. And but for the most part, there's nothing much doing here on the S&P. So there are some stocks to buy. You can, again, semiconductor stocks are doing fine. Have been doing fine. A couple have been beaten up the last couple days, but for the most part, you're still seeing home builders doing well. We actually took some profits recently on a semiconductor stock. We actually bought a home builder a couple days ago and are happy with that position. So there's some, and these are again in our aggressive strategy. There's some shorter term trades to do, some shorter term moves, but as far as the overall market, it's just churning sideways still, and it's still a very frustrating market. So don't try to make something out of nothing unless you're doing some individual stock trading, perhaps, because there are places to be. One of the stocks that we own in our aggressive portfolio is Facebook, and it's just gone bonkers here. And that one, had been moving sideways after a big move up. It had been moving sideways for several months, kind of tagged this 200-day moving average, and now it's broken out to the upside. They could be doing original content soon. Apparently, the video usage is moving from YouTube to Facebook, so they're hitting on all cylinders. I think after a rest, this stock could be a $100 stock. Could pull back a little bit and then head on up. So this is kind of one that isn't a trade for us. It's been more of a core growth company in our aggressive portfolio. But it's just one company. But again, it's something that on a day like today where the Dow's down 160 points, it's up about 1%. So there are some things bucking the trend, like I mentioned, some home builders, etc. Okay, let's take a look at the Russell 2000. Russell 2000 kind of had this potentially, a lot of people are asking about, I shouldn't say a lot, a few people asking about the Russell 2000, but you have this line here, and it broke above it. So when that happens, don't be surprised to see the thing break out, come back a little bit, and then start to turn back up and head off again. So this is, or is it a fake out breakout as we talk about? Could be. But we own a little bit of small cap, so we're not doing anything with it right now. The other thing you're looking at is gold. Nothing to do on gold. I mentioned that. I don't see any, unless you see something I don't see any trend here. So we're staying away from gold. How about oil? Let's look at the USO just so we can get the intraday. Oil's been pretty impressive to me. And the reason why is because, of course, after the big, nasty downdraft, we had the first pop, then it failed, went down to a new low, went up again, and we've since that time, and by the way, you can see I drew this line here. Once it broke that, it looked like right in here that we were going to break down and head back down to the lows, or maybe an inverse head and shoulder pattern where this was the left shoulder, this was the head, this was a right shoulder somewhere down in here. That hasn't happened. It's moved sideways and held up very well. If we get this 200-day moving average continuing to come down, which it will, and this thing continues to move sideways and eventually breaks out, that would be good. And I think we've seen the rig count start to come down a little bit, so that could lead to higher oil prices. Again, a lot depends on currencies. Okay, lot depends on currencies, and a lot depends on what's going on with Greece and everything else. It's not just about supply and demand of oil. How about international? International markets have been doing very well. The developed markets, you can see they broke out earlier in the year. They've been holding up very strong. Emerging markets, we like emerging markets right here. We think this works as well. Again, undervalued. A lot of people underweight emerging markets as well. How about interest rates? You can see interest rates have had a big move up from 1.6 to almost 2.4%. That's a big, big jump. So people in TLT, which is the Treasury ETF, have been getting hit pretty hard. This was the peak, and we're making lower and lower and lower highs. So let's see if it rebounds. But for the most part, I wouldn't be surprised if we do kind of come back into this little box and then maybe find some support. So, again, watch out for rates. They could, again, depending on what's going on. I mentioned recently about our trade, and we were short the yen in our aggressive strategy. That trade worked pretty well after this. We kind of held through this sideways pattern, and then finally broke out. We sold it, and it's kind of just been meandering sideways since. I think ultimately this trade will eventually work again. I'd like to see it a little cheaper. If you want to, that's the double short yen. You can also look at the double short euro. Watching that as well. If that comes in here, that could be an interesting play. I mean, again, both of those currencies are in trouble over the long run. It's just a matter of the timing of when do you get that, because everybody already knows that. So it's a matter of when do you get the timing right on those. Let's see. The last thing is the VIX. You can see the VIX is at the lower end, so people expect it to increase. Obviously, it did today, up about 7%. And as we're speaking here, the Dow finished down about 173 points, so about 1%. So a pretty down day across the board. One of those days where everything kind of just melted down. Everything just kind of got weaker and weaker throughout the day. Not panicky at all, but definitely got weaker as the day went on. So that's about it. We'll have more, obviously, on our radio show this weekend. And if it warrants, we'll do another podcast and be posting some more articles. All right, guys, don't forget eggerscapital.com. There's some stuff on the screen for you to connect with us. Appreciate it. And give me your feedback on that Periscope, because let me know if you'd like to see something like a Friday wrap-up or a Monday morning something or whatever it might be, just kind of a quick thing. And again, we'll show you kind of our screens live in our trading room and whatever else we might think of. All right, have a good afternoon.